Dow's up 189. Let's get to Bob Pisani. Hey, Bob.
Hey guys, happy Monday. Quite a reversal from Friday. Stocks up, bond yields up, gold's down. No bounce in oil, though. That's a little bit puzzling. Just take a look at the global markets here. You'll see the differential. Remember, the Hang Seng was open in the middle of last week. It's actually up. Look at the Shanghai down 7%. That's the differential. Shanghai's been closed for more than a week. That's the huge differential between the markets open and closed. Nikkei is down 1%. Stock 600 bouncing up fractionally. If you take a look here, remember, we have ETFs here that trade the China stocks, even when the underlying markets are closed. And you look here, you see the China ETF here to the upside right now, the VanEck Semiconductors Index up. The bank stocks, KBEs on the upside. Industrials are bouncing a little bit, and energy stocks are bouncing as well. If you look at China indexes and ETFs as well, since January 20th here, the Hang Seng down about 11%. Shanghai down about 11%, Hang Seng down 9%, China large cap down 11%, and the MCHI, which is the broad China, down 9.5%. Remember, these last two were trading while the market was closed in Shanghai last week, and they accurately reflected what was going on in Shanghai, even though the market was not open there. So these ETFs that trade here with the underlying stocks do accurately reflect how the market trades, even if the underlying market is not open overall here. We're about halfway through earnings season. What we want to do here is take a look at where we are in terms of the overall earnings situation. The numbers have been coming down a little to reflect the coronavirus issues. So since January 17th, a little before this coronavirus story hit, the S&P 500 earnings estimates have been lower by about 0.4%. These are the changes, not the actual numbers. And what you would think would be down the most is down. Materials, industrials, energy have had their earnings estimates reduced the most in the last couple of weeks. That reflects concerns about global growth slowing down a little bit on coronavirus. Hotels, restaurants, leisure, another group here also potentially affected. Those are all the most affected. The market's acting somewhat rationally on this, and obviously we don't know the final answer. What's hard to figure out is energy. You heard David talking about the downgrade over at Goldman for Exxon, but it's not just Exxon here. We're at the lowest level. This is the XLE, which is the major energy ETF, since 2016 right now. We're down about 12% for the year to date. And it's not just ExxonMobil. All across the board, anything in oil services like Halliburton and Schlumberger, anything in exploration and production like Devon, Apache, all notably weak. In fact, they're down 12, 13, 14%. So you can't put it all on Exxon. We're just seeing a complete collapse in the energy market overall. It's the one truly, truly weak spot we're seeing in the S&P year to date.